I think what I'd like to say first, Nisha, is that it creates an independent listed company, which will be by far the largest in branded apparel retail. And I think that that is in fact the most compelling part of the whole story. Investors have been talking about it, asking us to do this for a while, and I think this indicates that we not only listen to our investors but also take to fruition what they are suggesting and what they are asking for. Can't do that for everything that they ask for, but their voice counts a lot for us. And I think combining these two entities, Pantaloons and Madura Garments, gives you a very powerful platform, a strong company financially to fuel further growth, very powerful in-house brands which are already leaders in their respective segments. More than 8,000 points of sale, which I think is huge. A global standard supply chain, and I think most importantly, deep competencies and management talent in this space. So all in all, I think it's a win-win situation for shareholders of Nuvo, for Pantaloons, and I think we can look forward to some very healthy growth that will consolidate the position of the company as the market leader.
Right, the turnover of the merged entities would be over 5,000 crore rupees. What is the number, and if you can give us a guidance on that in the next few years, say 3 to 5 years is what you're looking at, given the kind of retail expansion and the retail opportunities that you see in the market?
So it would be inappropriate for me to make forward-looking statements, but I think it would be fair to say that based on the track record of this entity, the growth would be far above that of the market in this sector. So we're looking at very healthy growth rates. And like I said, the idea is to sustain and build on the leadership that this company starts off with.
Right. Give us a sense on how you came to this valuation where 5 ABNL shares would get 26 shares of Pantaloon Fashion and Retail.
So as would be the case in a transaction like this, we had independent valuers. And we had an independent party doing a fairness opinion, and this is based on the numbers that they have given. I think essentially it looks at the current cash flows, growth potential, so on and so forth, which is a predetermined, in some way, formula, if I can call it that, for determining valuation. And I think to my mind and in the judgment of the board, it's a very fair valuation that the valuers have come up with.
Right. Madura Garments has been doing well. In fact, it looks very attractive to most of the investors that I have spoken to. But were you waiting for this right time for valuation unlocking? Because of course in 2012 when you acquired Pantaloon Fashion and Retail, it looked like a logical step that Madura would be coming under this one listed entity.
So there is no right time. I can't tell you that this is the right time to have done this. But importantly, I think Pantaloons has almost doubled in the number of stores that it had come in with into the group when we had acquired it. So it's reached a reasonable scale and size. Madura, like I said, has grown at more than 40% in the last 4 or 5 years. So it seemed like a good time to put together these entities. Again, there is no perfect time. Maybe we should have done it a little later or a little earlier, but we think it's a great opportunity.
And under Aditya Birla Fashion and Retail, what is the kind of expansion that you are going to embark upon? How many stores and what do you see going forward?
So like the CEO said, they're looking at 250 to 300 new point of contact with customers as part of the growth plan of Madura. And Pantaloons is looking at about 30 stores being added every year, so which is substantial. I think that we're talking about 5 million square feet to start with, which by any standards is a very large presence.
Mr. Birla, I can't help but ask that while the world is looking, and especially in India, the big flavor today is the e-commerce space, and you are looking at more of a pure play and the erstwhile retail business model, and you're looking at more expansion there. What about the e-commerce bit? And are you one of those conservatives who hasn't got the e-commerce or isn't too bullish about e-commerce just yet?
No, I think firstly this space of organized retail is also growing very fast. We've just seen the tip of the iceberg. So it's in itself a very high growth space and will continue to be so for the foreseeable future. I think that, the management team, I'm sure, will look at e-commerce as one of the platforms for growth. I believe that it's a very compelling story there, especially for a company like ABFRL, which this company will be called. And no, it's not that I don't believe in e-com. I think that these brands already sell on other e-com platforms. And I'm sure that the team will focus on e-commerce as one growth strategy going forward.
You have a very small presence in e-commerce. It's at a nascent stage. Are you looking at a huge growth in that? If you could throw more light, and is there an inorganic opportunity as well for that to be grown?
So like I said, e-commerce is a platform that I'm sure the team will look at. It's a platform that you can't ignore from a growth point of view going out into the future. It's futuristic, it's here, it's happening. What exactly the numbers will pan out with, difficult to say as of now, so I can't comment on that. But, safe to say that it will be, I'm sure, a growth driver going forward.
And would you also say that more and Aditya Birla Retail, as part of the strategy to have merged in this particular restructuring process, would have in some form adulterated the kind of portfolio that you have and a clear combination between the two companies?
So that's a very hypothetical question, Nisha, and I don't think that we've come up with anything that indicates that more will be a part of this. More is held by promoters in a completely different entity. It's a different business, supermarts and hypermarts, and there's no intent as of now to bring it together with this.
And would we also look at more investments into the company once, first of all, the timeline in which we are looking at completing and the fundraising plan, because value unlocking can be far greater after this combined entity comes to fruition?
So the timeline typically would be 6 to 9 months to get all the statutory approvals and permissions. Funding, I think they pretty much have a strong cash flow and they can use their internal accruals without having to raise any funds from outside. So no funding plans, as in no fundraising plans from outside as of now.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.